Hello, my name is Joshua Morrison, an investment analyst here at True Potential. This week, we focus on two main stories emanating from the headlines. The first relates to even more positive economic data stemming from Japan, whilst the second refers to the outcome of India's latest general election. Over the past month, we have touched upon Japan's economic prowess, following the abdication of the former emperor in favour of his son. Previous editions have outlined the likes of more clarity from the Bank of Japan regarding interest rates, as well as a material uptick in the manufacturing performance. Well, we can now add another positive piece of news. Data released earlier this week points to Japan's GDP for the first quarter of 2019 exhibiting growth of 0.5%. This translates to an annualised rate of 2.1%, an acceleration from the previous quarter. Market expectations had been pointing to a contraction, thus the outcome is much better than forecast. Moving away from Japan, earlier this week, it was announced that India's current Prime Minister, Narendra Modi, had secured another 5-year term following a mammoth election in which 900 million voters were eligible. His party, the Bharatiya Janata Party, or BJP, looks set to win 300 of the country's 543 available seats in Parliament, the largest such victory in over 30 years. The economy of Japan is the world's third largest and is a significant driver of overall global growth. The country is currently struggling with a shrinking and rapidly ageing population, the amalgam of which has resulted in a high government debt to GDP ratio of roughly 200.5%. However, given the uptick in Japan's most recent GDP figure, it showcases that, despite their unfavourable demographics, the country is still performing strongly. Ultimately, this should quell the nerves of many investors in the region. Moving on, India is the world's 6th largest economy and constitutes over 10% of emerging market growth. Following the announcement of Modi's victory, the Nifty 50, India's official stock exchange, rallied by over 3%, the largest such rise in a single day for over 3 years. Whilst the stories we have covered relating to Japan demonstrate that the economy is off to a good start, there are still two significant challenges that lie on the horizon. The first is that US-China trade negotiations could completely break down, which could derail export growth. This impacted the economy last year. The second relates to a possible increase in the country's consumption tax from 8% to 10%. If implemented without enough impetus from the wage growth, consumer spending will take a hit. A similar raise in 2014 plunged the economy into a recession. Ultimately, only time will tell how these two factors influence Japan's economy. Yet it is reassuring to have supportive economic fundamentals already in place for the world's third largest economy. With clarity setting in around the future of India's politics, we should see greater optimism flow toward emerging markets. If we see a resolution forthcoming between the US and China, investors will certainly be turning their sights towards this economic area. As always, don't forget to subscribe to our YouTube channel to ensure you never miss out on our economic updates. Thank you for watching.